Hi, welcome to Market in a Minute. Before I forget, I want to wish everybody a very happy Thanksgiving. This is an important week for me, right? The Buckeyes are playing Michigan. I should say the team up north on Saturday. I'm going to be Joe Namath here. I'm going to guarantee a Buckeye win, and they're going to cover as well. Well, the markets are oversold. They got oversold. We took our hedges off and we went long in our tactical strategies. So we're bullish. We'll see how long this lasts, but we're bullish. So until the technicals change, we're going to stay long the market. We think the interest rate cuts are more likely now. There's been some Fed governors coming out and talking up a rate cut. Certainly makes sense, and we're going to cover that a little bit. Then we have a number of updates on a number of stocks we've been following. So the stock market got very oversold, so went down 5.5% from that high it hit back in October. And you can see here on the chart, it went above the very aggressive trend line, went above the higher end of that trend line, and then broke again the 20-day, the 50-day, and it paused at the 100-day, and which kicked in our buy signal. So right now it's just a little bit above the 50-day moving average, and it needs to hold these levels. So Fed Governor Waller and a couple other Fed governors have come out and said that it's more likely the Fed's going to cut interest rates now, or they would like to see an interest rate cut here in December. And I think it makes perfectly good sense. You see gasoline prices coming down so much, oil prices coming down. That's very anti-inflationary. So that's a good setup going into next year. And in general, the employment market is really tough. So interest rate cut, get the housing market going. It'll accelerate the employment picture a little bit. So got to get the housing market going. That's been in a depression now for 3 years in terms of new homes being built. And I think you can also see autos kick in next year as well. So there's some very favorable, fiscal stimulus for autos next year. And I tell you what, I've been seeing some of these videos about the General Motors new muscle cars they're coming out with. If they're true, there's going to be a lot of those muscle cars sold next year. This is kind of funny. Mohammed El-Erian, I like him. He's well thought out economist. I always listen to what he says. But he says the Fed, it's like driving, their policy is like driving, looking through the rearview mirror down a windy road. Okay. Can you imagine that? And so they're always late. So I think maybe they're taking some of this criticism to heart, and maybe it's more likely they do cut in December. That'll be a nice catalyst. Crypto went through a bear market. Lots of margin calls, in my opinion. I think most people kind of leveraged up that trade, and then probably it impacted the technology sector as well, along with the CEO of NVIDIA. Like we pointed this out a couple times and really pounded the table on this thought before NVIDIA reported their quarter, that the CEO really brought forward a lot of those expectations. So going into the quarter, high expectations, and then the outlook. He also basically spelled that out. So there's no positive surprises to this story anymore at this point, and there's competition coming at them. So we've always said this, that Google has the best technology, and Google is basically developing their own chips to have a much lower cost solution. I think it's kind of a killer to those companies that can't develop their own chips and have to buy the NVIDIA chip. Some of the Mag 7 stocks have been crushed. You look at Meta down almost 30% from high to low, but a lot of those companies really got hit pretty hard. So it got set up for a bounce here. This is the tech sector. So you can see, again, that trend line, similar to the S&P, but they were way above the trend line here. And so the technology sector where the S&P pulled back 5.5%, the tech sector pulled back about 13%. So it created a nice oversold condition in technology. And, I guess we were a little bit distrusting of the seasonal trade, but I think the seasonal trade probably will work out this time. The debate continues. It still is out there. The debate about are they going to get a good return on all this capital that they're spending, the technology companies? Is the return there to actually afford to build out all this AI infrastructure? And we would say, probably, but what we're concerned about is those companies that are doing it with debt. We think that's a big mistake because those returns could shrink pretty aggressively. Like for instance, if Google was aggressive about pricing, or Amazon aggressive about pricing their services, or even Microsoft, if you're leveraging up your balance sheet to supply, this service, and those margins aren't there, it's doomsday for those companies. Now, in terms of stock updates, Grail. If you followed us, you've known for well over a year we've liked this company a lot. As soon as it was spun out of Illumina, we were buyers of this company. So buyers, below $20, and it's had a beautiful run for us. This is, if you could look up in the dictionary and say, okay, what's the emerging healthcare strategy at PVG trying to accomplish? That's what we're trying to accomplish. An 8x return roughly over a reasonably short period of time. And we think it's going to go higher. So Exact Sciences is being bought out by Abbott. I would expect somebody else to come in and buy Grail. Highly likely, in my opinion. Grail's got a great technology, and so we're hopeful that happens in a reasonable period of time. But next year, we think that Grail will likely get approved by the end of next year to get the insurance money to really expand out their business. Gap had a great quarter, even though we like Gap. Really nice quarter, so happy about Gap. Anavex, the Alzheimer's company. As you know, there was a bear raid on this company, and I think the bears, they just don't follow it that closely, okay? The idea around them getting approved by the EMA on the first shot, we didn't think it was a high likelihood, but we think it was possible. So it being possible, that stock could have been up quite a bit off that approval. Now it's roughly $3 a share down from its high of 14. That makes no sense. So there's this bear group, ignorant about, I'm not saying stupid, but ignorant about really what the story is all about. So what Anavex is looking for is the path forward. The EMA gave them the path forward, and then they're going to have more information coming out about what the FDA expects of them to get approval. So that could be very positive as well. They report earnings on Tuesday morning, so get up early and watch the Anavex conference call. Capricor. Okay, this is another one that the Fed's got a hold of. So this butthead Martin Shkreli, okay, known convict, was in prison. He comes out of this, so this is second stock. So Anavex was his first one. This is his other stock that he's short now. Okay, very similar. This company, however, is in the Duchenne muscular dystrophy market. They've got what looks like a really good drug. They asked for approval after phase 2. The FDA said no. We're not going to do an advisory committee on the drug. Go finish your phase 3, and we'll work with you. Basically, that's what they said. So phase 3 results should come out at any day. Maybe they're a little bit overdue, but any day now they'll come out. The company has about $2 per share in cash. If it hits, okay, stock's at $4 to $5. If it hits, the stock probably opens at 20 or maybe 30. And the downside is roughly $2 a share where the cash is. So at 4 and change to lose 50% to get a 5x return, that's worth taking the risk. Okay, so that's kind of how we approach these biotechnology companies. Is it worth the risk? And you got to have enough of these in your portfolio for them to pay off. So you have 5 or 10 of these in your portfolio, there's going to be a few that are going to pay off and pay for the ones that don't. But Capricor, we think it's a risk worth taking. CAPR. Wendy's, okay. I grew up in Ohio. Wendy Thomas was in my third grade class for a short period. So this is when Wendy's was first starting to get going. We see the stocks as being way oversold. Looks to us like the fundamentals are starting at the bottom. It's not a big growth company, but there is growth there. We think that the stock is starting to bottom out and the fundamentals are starting to improve. It's got close to a 7% dividend yield. This should be a prime target of private equity to come after Wendy's to buy them. Now, lower rates, we see that as highly likely next year. We're going to see lower rates, especially with new people in the Fed and the Treasury probably trying to push down the 10-year Treasury here some too. So we'll expect less borrowing at the 10-year. Floor & Decor, we need to own this. So I own a little bit, but not much. I really like this play. It's a great store. They have big leverage to a housing cycle, big leverage. So we like this one, and we're looking for spots to buy this. Lowe's executing well. We like that one as well. Not as much upside as Floor & Decor. And then the home builders all look pretty interesting to us on this theme of lower interest rates. Amazon of the Mag 7, okay? That's our new favorite, okay? And the way to play that is through AMZU. Google, love Google. I think Google's probably the best company that exists, best technology. Amazon is due for a nice trade here. We like Marvell and Texas Instruments. We think both are attractive, both had reasonably good quarters, so those will probably move higher. Uber's down, okay. Their earnings, they're gonna spend a lot on this autonomous driving, so they're kind of down earnings. I'm a little bit puzzled by that. I think it's an interesting stock. I own a little bit of this company, not much. We're looking at buying into this story. Still working on it, but I think it's pretty interesting. Lots of positive sentiment on Uber, and I think if they execute on autonomous driving, this stock is up very significantly. In terms of quantum computing, IonQ is probably the best way to play it. So it's a pure play, and of the pure plays, it's the best. Probably has the best technology. Now we still like Google, and we think probably IBM has a really good product as well. This is longer term money. So if you buy this, the stock's pulled back. IonQ is pulled back. Pulled back to a level I think it's attractive. But for longer term money, view it as, okay, 5 years out, this stock could be up quite a bit from where it is currently. Now the market has really gotten negative on the BDC group. And here is the BDC ETF over a long period of time. So you can see here where it bottoms out. Okay, this is not a growth industry. It's for yield. And you can see where it is currently. It's consistent with other bottoms in the market over an extended period. So this is roughly 2018, the last time it bottomed like this. The furthest back, it bottomed like this. And you can see these bottoms through here. This is COVID. So during COVID, everything got clocked and it came back very quickly. But we think that the BDC group is interesting here. And our favorite company is, we've talked about this a number of times, is BXSL. Our favorite company we've talked about a few times is BXXL. And so pays a nice dividend yield and very high quality. And we wouldn't object to buying the ETF as well, BIZD. So that's our view. We're looking for a tactical trade here. at least into year end. And then next year kind of sets up really interesting. The economy should accelerate as we go through the year, and that's going to probably push money into some of the areas that have underperformed, like small cap and cyclical companies as we go through next year. And then we see probably the spending on AI to start to start to flatten out a little bit. So if you have any questions, as always, ping me, come to my website, Patrick Adams CFA, sign up for a hard copy of Market in a Minute. And again, calling for the Buckeyes to beat Michigan. Okay, we got our butts kicked 4 years in a row now. It's getting kind of tiring. I think they're going to open up the offense. As long as it's not freezing cold, I think the Buckeyes take this rather easily. Thank you. Have a great Thanksgiving.